Hello guys, welcome to the Thursday forecast and trade recap, and let's get started with the first pair, so the euro and US dollar. This pair has finally broke the low and retraced, so we have been stuck in this prior range bound structure right here after the impulse. So there was a possibility to enter on a flag, but for me personally the flag did not fit my plan. So right here was the I believe this would be the flag entry area. So this would then be the entry candle for the flag with the 12 pip stop. And for me personally, it just did not fit my plan because I saw a huge wick and an aggressive retrace. Plus, looks like the stop loss was really small. Let's see here. So yeah, it wasn't that big of a stop loss, so definitely didn't fit my plan, this one. And then we just started to range around and we broke the low and we have now retraced. So yeah, this trade just did not fit my plan because of this V reversal structure plus this huge wick. So those were the two main warning signs. When I see a huge wick and an aggressive retrace on every pair, it is a no trade for me, except maybe if we get like a really flat wide range and then just break and retrace this first flag high. So that's the only case where I would take that sort of a setup. But here we broke the high and we got momentum, and then that momentum continued. So just no range, so just doesn't fit my personal plan currently, because we just broke into this lower liquidity area and we retraced, leaving double wicks. I am expecting for more range bound price action. So double wicks indicate a reversal or range bound price action. So I'm expecting something like this, and I'm not taking any sort of trades. What I am waiting for maybe tomorrow or today evening is a nice flag or a nice break and retest further down. Something like this, some sort of a formation, but just for the price to continue down. Again, it can also reverse up, and then we get a range, and then we push up, and then we look for a buy opportunity, something like that. So right here we're definitely stuck in a range with some, I would say it's not bad price action, but it's definitely range bound price action. We need to wait for a trend. At least it's not full of wicks like it was here. So this is bad price action. This actually looks like maybe building of some momentum. Again, let's see if this does continue down. For the euro and the Japanese yen, also a flag did form right here. This would be the entry candle. For me personally, after seeing a huge wick, I wanted to see a wide range, which we did not get. We just got this retrace and then a flag formation. This bearish candle is the entry candle. So this is the first low, first high, second low, second high, and the bearish candle is our entry candle. As I said, does not fit my plan at all. After the huge wick, I want to see a wide flat range. So did stay out of this one also, and then we broke the low and we have retraced. This looks the same as the euro and the US dollar. We broke into the lower liquidity area and retraced, signaling more range bound price action. What I'm waiting for the rest of this day and for Friday is for some nice momentum down. Then I'll be looking to sell if we get that nice large momentum down, if we move away from this liquidity area, or I'm seeing if we get a V reversal, a range, a push up, and then some sort of a buy formation further up. Really similar, or actually the same forecast as on the euro and the US dollar, just waiting for a move up or a move down. And this is not bad price action, but it is range bound price action. This is bad price action with the huge gap, huge wicks all over the place, no real direction. So there is a clear distinction between this price action and this. Now we can see what happened with the Aussie and the US dollar. This pair is clearly stuck in a wide flat range. That's the first thing that we can notice, that it's stuck in a wide flat range. Then there was an opportunity, actually would not be tagged in, but maybe some people were looking for a trade at this point. For me personally, two major warning signs. First one, we are stuck in a wide flat range. Usually trades that happen here don't work out. Second warning sign is we broke, left a large wick and retraced. So for me personally, those two warning signs are definitely enough to keep me out. What was going for this trade is only this prior momentum and this no shift in momentum small pullback. So not really enough to counter all of the warning signs, those two huge warning signs. And as I said, currently I'm waiting I'm waiting to see if this does move away from the range bound structure. So either to the upside or to the downside. I am looking for a nice flag or a break and retest further down. Let's see if we get that large momentum. Or maybe this can also reverse and give us a large impulse, maybe a range and then a large impulse to the upside. I will be looking to enter. Also another warning sign, that's the third warning sign with this trade, is the overall V reversal. So usually after a V reversal, I'm not looking to take any shorts or longs because it usually just pings me out with a range, so it stops me out of my position. That is why I'm not entering on any sort of trades after this large V reversal in this leg. I'm waiting for this to move down or move up. Really simple. For the next one, which is the Aussie Japanese yen, so same thing right here. I was seeing a larger V reversal, 3 warning signs. First one, V reversal, we're stuck in a range and we just broke and left a large wick. Definitely not enough to take any shorts for me, but wouldn't tag you in anyway. So now we have continued down and I'm seeing if this does move away from this current structure. So yeah, I'm waiting for a nice push up or a nice push down. Same as on the Aussie and the US dollar. So let's see if we get something like this and then a nice flag or a break and retest. Of course, there is some liquidity below this larger range. So I would say be careful in this general area. And I'm also seeing if this will maybe reverse up, get a range, push up, and then we continue to the upside. Then we can look to buy further to the upside. For the next one, which is the pound, this pair looks to still be a bit volatile. So if we put the stop loss, we can see that with a 16 pip stop loss, it's kind of really small. But I would be actually interested in taking a really high probability trade. So if a really high probability trade happens, I will be happy to enter. Prior price action, we saw a V reversal right here and then a range. And then this did continue to a downside. So we did break the low with momentum, and at this point I'm waiting for that high probability setup. The only one I'm looking for on the pound, which is a flag and then a break and retest. Sorry, a flag or a break and retest. The best one, the highest probability one, would be a break and retest trade. That's the only thing I'm looking for on the pound. Same thing to the upside, maybe a V reversal, a range, a push up, and then either a flag or a nice break and retest further to the upside, something like this. Definitely looking for that break and retest because it's so high probability, and I am seeing some momentum to the downside. Of course, we did expect that momentum down after this huge ascending, which I did talk about, I think yesterday, that we have this really clean ascending, breaking, leaving wicks, leaving huge wicks right here, here, double wicks here. And I was definitely expecting a reversal to the downside, which is now confirmed with this large momentum down. So let's see if we can get in on a nice short trade. For the final pair, the New Zealand and the Japanese yen looks the same as the Aussies. So we had this range, then we got a V reversal, and then maybe some people did have an order on at this point because they were seeing large momentum, no shift in momentum, pullback, small pullback, continuation with a nice close. Moved away from the low, but not really by that much, and closed with a little wick. But for me, 3 major warning signs. The first one, stuck in a larger range. Second one, V reversal. Usually we end up just ranging and not going down. And then, yeah, the third one would be that wick, this wick, like I said. So 3 warning signs, but even one of those warning signs would be enough for me not to take a trade, I think. Actually, maybe I would tolerate this wick, but the range and the V reversal was a really bad warning sign. It wouldn't tag you in any way. It continued down, created a huge wick. Of course, below is this sort of a liquidity area because of the larger range. So I'm waiting to see if this does continue down. If it continues, I'll be looking for a flag or a break and retest. Same thing to the upside, looking for a large push. Maybe something like this. A really big push and then a flag or a break and retest. Or we can get this volatility, which I don't really expect because we got a V prior to that. What I do expect is because we have this clear V reversal formation, I expect a larger range here and then possibly a push down, and that we can get in on a nice trade further down. So that's about it for the forecast and trade recap. I am seeing some potential on the euro pairs and on the pound. I believe the rest of the pairs, so AU, AJ, NJ, are going to remain range bound like they were for the prior couple of days. So I would say focus on the euro and the pound. That is it. I'll see you guys in the next video.